we will be stepping into the next stage of understanding financial inclusion in Pakistan with our next segment. That is obviously going to be very dynamic because we have multiple speakers. It will be a moderated talk. Our moderator is Mr. Fawad Kader. He is somebody who has worked in digital payments and really knows how the business works. He has an extremely knowledgeable panel with him. For those of you who are tuning in through Facebook Live, I believe you will be able to ask questions, and there will be so much to learn from all the individuals that he has on his panel, and they will just be discussing their various perspectives. So one of the wonderful things about a conference like this is you get to look at and listen to various perspectives, people working in the same realm, but obviously have various experiences that a lot of people can learn from. I do believe we are technically ready to go in. Are we? I believe so. Yes, we are ready. So without further ado, thank you, OneLoad, who is the sponsor for this particular panel. Without the support of people in the existing ecosystem, things would be a lot slower. So take it away, Mr. Fawad Kader. Thank you.
Thank you, Faris. Thank you so much. Okay, so as you all know, the topic of the panel discussion today that we are here for, and the panel that I have, this team panel that I have with me, is the reality of financial inclusion. What we are going to do today is try to analyze what we have achieved in the last 11, 12 years that we have been at it for financial inclusion in Pakistan. I would firstly like to just introduce the panel that I have so that we can directly deep dive and understand if we are on the right track, if we have to make any changes to the current assumptions, to the current strategies that we have to achieve the financial inclusion in Pakistan. We have with us Mr. Omar Moeen Malik, who represents Easy Pesa, is one of the people who have been the pioneers in the financial inclusion space. He has been with Easy Pesa since the launch of Easy Pesa and carries a lot of experience in this space. We have with us Mr. Rehan Akhtar, who is the Chief Digital Officer for Karandaz, Pakistan. Has a diverse experience when it comes to, he's been part of financial inclusion deployments earlier, and now he's trying to support through the Karandaz donors and funds to accelerate financial inclusion in Pakistan. Then we have Mr. Hiraj with us, who is the CEO for OneLoad, which is a FinTech which has been there for quite a while now, has been contributing to the industry, has been coming up with different products and services, and now they also have an EMI license with them. We have with us Ms. Halima Iqbal, who's basically CEO for Oraan, which is a relatively new fintech, but is digitizing an interesting use case, which she would be able to talk about in a while. And lastly, we have with us Mr. Walid and Piracha, who's a consultant who's been giving consulting to the government of Pakistan, to the regulator, to different organizations, including World Bank, and is also heading and is the CEO for Finovate, which is another upcoming fintech. So I would just move on to, after this brief introduction, I would just want the panelists to give a deeper introduction into what they have been up to, what their organizations are doing related to financial inclusion. If I could start from Omar, if I could ask you firstly to explain how Easy Pesa is contributing to this cause.
Assalamu alaikum. Thank you, Fawad. So, how is Easy Paisa contributing towards financial inclusion? Well, we have a branchless banking license and we've been operating for the last 10 years in Pakistan. And we have a very extensive agent network across Pakistan, about 75,000 agents, where we are serving customers for their financial transactions. And we also offer our wallet services through the USSD menu and through the app. So yeah, we have about 35 million registered customers with us today, of which about 8.5 million are active. That's basically what we're doing.
Thank you, Umar. Rehan, if you could explain how Karandaz is contributing to the financial inclusion space.
Sure. So first of all, thank you, Fawad, for inviting me for this panel, and I think a great initiative to have a Pakistan chapter of the overall Singapore FinTech Festival. I think it's going to put Pakistan also up there. I think COVID has provided this opportunity for a lot of people to participate in this as well. So well done on capturing and harnessing the opportunity as well. A very brief introduction of Karandaz for those of you who we have not interacted with. Karandaz is a fairly new organization. It's a not-for-profit organization set up in 2015. It's funded by UK Aid for International Development, now called FCDO, and also Bill and Melinda Gates Foundation. The overall focus and the overall mission is to help Pakistan and help Pakistanis in their journey towards financial inclusion, be that individual or be that a business, especially we're focusing on SMEs. So both of these segments are excluded. The formal banking systems do not focus either on SMEs or on individual, and that's the mission under which the two donors came together and founded this organization. The organization has multiple programs, but I'll just focus on the program that I'm managing, which is funded mostly by Bill and Melinda Gates Foundation. The program is to use technology, or to rather exploit technology, and look at the business models and use grant to try to disrupt the ecosystem, to tip it in a way that in a sustainable way that financial inclusion could actually come through by the private sector. In that, we have a view of the market, which is that the infrastructure right now, and I would say this is a view that we developed in 2015 and 16, that the digital infrastructure is not enough and somebody has to lay that infrastructure. Definitely it is the government's job. So we're working with the government and State Bank and partly with SECP now as well to lay that infrastructure. The second thing is that even if you have the infrastructure, the private sector market has to be set up in a way that it is competitive and does not only focus on closed loop use cases, focuses on interoperable use cases, and also focuses on market development as they focus on market share. And I think we also saw that early on when the branchless banking licenses were issued. So the two big players, JazzCash and Easy Paisa, went into a retail war, which did not benefit in the long run. So that's where, we encourage a lot of new fintechs, a lot of new ideas, and we fund them through different initiatives, trying to bring in challenges to the market, also to incentivize or to nudge the market towards a more collaborative model rather than an exclusive model. Then we also have an intervention where we work with the regulators on the policy side, on the regulation side. So with central bank, we are involved in creating the digital banking regulations, and we also work very closely with them in terms of policy research or regulation research with respect to the existing current regulations, or if there is any maintenance or upkeep that's kind of required. And lastly, we have a research agenda. So we try to fill in the knowledge gap that the industry may have. We believe that while the larger players have more customers and they understand the customers better, but then the smaller players do not have that advantage. So what we do is we research and we make it publicly available. And not only research, we have done, we've created UI UX frameworks. So if you need to create a financial app, what are the guidelines? So these are all sort of frameworks and toolkits which have been developed through research, which is available for market to utilize. So how we position ourselves is something our donor, Bill Gates talks about is as an honest broker. Our key KPI is market development and to help the market grow so that everybody wins, and we create more and more financial inclusion. So that's the overall agenda. I'm happy to talk about in detail in other areas as well as we move to the panel.
Thank you, Rehan. Thank you so much for the introduction. Walid, if you may introduce yourself and what Finovate is doing.
First of all, thank you, Fawad, and I would also like to thank you, Pakistan FinTech Association, for organizing all this. As you introduced, I primarily work as a DFS payments consultant. I have been working with a number of regulators, public institutions, and developing agencies. And my primary focus has been towards digitizing government-to-person payments and person-to-government payments. So that's where I have been working with the on the public sector. I'm also running and I'm part of two fintechs. One is called Pocket Help, which is a crowdfunding platform which is digitizing donation payments in Pakistan. And the other one is Moeen, which is a digital lending platform. And we are working in the space of micro enterprises, where we go and mainly focus on doing lending for the invoice financing. So it's a collaborative platform where we work with different organizations and distributors and manufacturers, and work with the retail network so that any access to finance needs which they don't have, we could fulfill them. That's basically from my side. We can talk about this more later on.
Yeah. I'll move on to Halima. Halima, if you could introduce Oraan to us and how Oraan is contributing into this space.
Thank you, Fawad, for having me on this platform. I'm the founder and CEO of Oraan. Oraan is Pakistan's first women-led and women-first financial technology platform, which has adopted an age-old method of group savings called ROSCAs, or commonly known as committees in Pakistan, and given it the power of technology to enable people from the informal economy to the formal economy. Adopting a gender-inclusive perspective is very important for us. When you look at the financial inclusion space in Pakistan and the general population, half of this country is women. And yet the financial inclusion for women is around 6 to 7%, which is incredibly low. So adopting that perspective and giving them a tool that they're very comfortable with, not only from a cultural perspective, but also from a social and religious aspect of it, and bringing them through technology into the formal economy is something that we take pride on, being the first movers in this space and bringing people from the people who are either excluded or stand at the fringes of the formal economy, giving them the convenience and accessibility of money that they need to graduate into more mature products.
Thank you so much, Halima. Thank you so much. It's good to see women actually coming up and contributing in this area. Hiraj, over to you. How do you see as a technological entrepreneur who's been working in this space for a while now, and with OneLoad, that a brand that you have created, how do you see this space, and how is OneLoad contributing?
Thank you so much, Fawad, for inviting me to the panel. And so OneLoad is an app that was launched a few years ago. The primary goal of OneLoad is to bring small shops and owner-operated businesses to essentially the formal world, to the digital world. And financial inclusion is a second step of it. The first primary goal was for retailers to start doing commercial activity through their app. The behavior that they previously or independent of OneLoad is typically, when procurement of products happens for small shops. And when I say small shops, we are talking about literally the roadside vendors, the micro retailers who in fact are not even in the SME sort of definition. The State Bank's SME definition is a company that does 800 million rupees of business. The people we are working with probably won't even, their owner-operated businesses, probably 1,000 of them together won't reach that level, or 10,000 of them won't reach that level. So this is literally the owner-operator sort of roadside vendor, shutter-down retailer, a retailer who doesn't even have a door. We started out with the goal of giving them the ability to procure products and services from corporates through the app, and settling those accounts with the corporates through the app instead of through physical cash collection of salespeople. So a lot of these retailers are selling products from leading companies, formal sector companies, whether it is Coke or Pepsi or Nestle or others. And typically, all payments to these corporates is through cash collection, and all ordering is through paper-based systems. And the number of these type of retailers, those numbers vary all over and depends on definition. But according to one McKinsey report, it's about 4 million informal shops in Pakistan, and compare that to about 30,000 locations in Pakistan that actually accept Visa, MasterCard, and card-based transactions. So the informal economy is a very different world from the formal banked retailer world. So digitizing them is basically our first goal. So typically our use cases are the first vertical that we looked at was the telecom vertical. The second one is the financial services. So when retailers are providing digital services and financial services to walk-in customers, there's settlements with corporates, whether it is Telenor, GSM, or Telenor Easy Paisa that Omar is a part of. Their transactions with those companies, theoretically, today through their traditional distribution chain is cash-based. For OneLoad, we digitized that and we have aggregated that for multiple providers so that the retailer doesn't have to deal with multiple vendors. And in our case, about 75% of the settlements between the retailer and the corporate do not involve a physical salesperson trip. So that's sort of one aspect of what we do. The other is that, of course, with digital services such as mobile packages and internet packages and utility bill payments, and also financial services. So, for example, a few hundred of our retailers are doing cash deposit for Easy Paisa wallets. All of that is something that they serve the walk-in customer when the customer comes to their shop, they serve them through the OneLoad app. Additional stuff that is down the pipe is being able to provide medical advice to customers and provide travel and other services. So this is a retail-driven model, and with COVID, of course, with retail shutdowns, the business growth was reduced. It hasn't gone. The growth is still there. It was cut down for a bit when retail shutdowns were happening. Nonetheless, we continue we serve about 10 million customers a month, despite the shutdowns through our network of about 37,000 retailers in 150 cities and towns across the country. The big push for us is now to convert our retailer base or graduate our retailer base through our licensing as a regulated financial institution to accept digital payments from the numerous telecom and digital wallets out there, and whether it is through QR codes and NFC driven or Visa, MasterCard payback-driven payments. But the next sort of area for us is to focus on is essentially to become an acceptance provider as well to these small shops. So that is what we do in a nutshell, and it's been a fascinating journey to this day, and the growth trajectory remains there, and it's been non-promotional led growth. So essentially, the interesting thing is that we've never had to spend even a single rupee of promotional money to have a customer sign up. So that's a summary of what we do. I'm happy to answer more questions through the Q&A.
Thank you so much, Hiraj. So I'll now go into the questions that we have for the panelists, because we would like to know more and candid opinions of all our panelists who have been in this space for a while, to actually answer the question or the topic that we are basically discussing in this panel, and that's the reality. That's the focus. So we would have to discuss this candidly in order to just dissect the numbers, the achievements that we have had, and what more needs to be done in order to improve financial inclusion in Pakistan. So my first question to the panel is that when we started off in 2009, probably with the launch of Easy Paisa being the first brand for financial inclusion, with the State Bank's initiative of branchless banking regulations that came out around 2008. We at that time did not have exact numbers, but the numbers of financial inclusion were around between 8 to 10%. The first World FinTech that came out in 2011 showed a financial inclusion percentage of 11% in Pakistan. In the last World FinTech data published in 2017, that has increased to 21%. Now, my question to the panel is, as someone who's been working in this space for more than a decade, are we there? Are we on track? Are we actually achieving what we had set out as ambitions at this initial point, or are we lagging behind? How do you see that? And I would start from Rehan, if you could start to respond to this, and then I'll move on to the other panelists.
So thank you, Fawad. There's another survey which is done, which is also an international survey, which is called Financial Inclusion Survey. That's funded by Gates Foundation, and the two surveys are also now merging. The one that you're referring to is funded by World Bank. According to the Financial Inclusion Survey, it's a much more pessimistic number. The last survey that has been done is in 2019, and now the results are being compiled. And according to that survey, we have reached now 21%. This is a demand side survey, so they go ahead and ask people, and it's a large representative sample, and they ask people if you have an account or access to an account or not. So it has been reported that now we have 21%. And in 2017, the numbers were about 14%. So as they say, the glass empty or full. So, as eternal optimists, we need to look at what is out there and what is the opportunity. I believe that if you analyze the last decade, I think the first 6-7 years are irrelevant because there were two players who were competing on retail, and there was literally no focus on mobile account. I was also part of Telenor at that point in time, and if there were any efforts, it did not bear any fruit for even the company to focus on it. However, in last 4 years or so, and I think the game has changed, and that's where we also see that if you analyze any market, so there are 4 or 5 actors. If you just take up the Porter's model, so there are incumbents, there are new entrants, there are suppliers, there are consumers, and of course there's a regulator. I would add, who has the power set the dynamics and to set the game. So I think both the incumbents, who were EasyPaisa and Jazz Cash, and while UBL and HBL also started, but they kind of did not reach that kind of a scale. But the two incumbents, we can very clearly see that their approach to the market has changed. The incumbents, which was OneLink, which was NIFT, their approach to the market has changed. And that has really allowed the new entrants to come to the market. I think the investors were already looking at the readiness of the market. So it's not that the investors did not have money and we did not have talent. I think the environment was not conducive. And on top of that, I think the regulator has also played a favorable role in introducing, layer by layer, newer regulations which are pro-financial inclusion. And at the back of it is, of course, a commitment by the country through a strategy which is called National Financial Inclusion Strategy, and World Bank helped the country develop that strategy. So there is a commitment to it, and kudos to the new government to continue with that strategy, and they have put up even far more ambitious kind of targets. So I think we have a vision. There are a lot of countries who do not have a vision. So Pakistan has a vision which was created 5-6 years ago. We have the ingredients, we have the players, we have the talent. We now also have the capital, the private capital coming in. We also have a regulator that is pro-financial inclusion, and not only State Bank, but also SECP, who's another regulator and plays an important role. So they're also very pro-financial inclusion. And what we keep hearing from government is also, a push towards creating digitization. And then on top of it, I think COVID has kind of, really pushed everyone. So, for example, eliminating the price on P2P, which nobody could imagine that the OneLink could take a step because of the governance, and you have asked me to be candid, and because of other sort of issues. So they could have taken that step earlier. The market could have responded to the consumer need earlier, but they did not. So I think COVID has further kind of accelerated that. So I think we are right now at a stage where, while there's a lot of work that needs to be done and only 21% market is covered and 80% market is still left to be covered and introduced with an account, mobile or otherwise, or however way it needs to be. But I think right now we have all the checks. We have a regulator that's financial inclusion pro. We have investors who are investing in companies. Hiraj has raised money. There are a lot of other fintechs. Halima, they're raising money, and foreign investors are investing. This shows confidence in talent and the market. We also have the incumbents. I think that's a very important element, because for the first few years we were fighting the mindset with the incumbents to open up. There's still incumbents who do not open up, but I think the incumbents, at least the forward-looking ones like EasyPaisa and then Jazz Cash following them, they have opened up. And now they're taking a more ecosystem approach rather than pushing their own sort of account as a last mile. So I think all of this is positioned right. What do we do with this market play? Who are the winners? Who are the losers? How does the game kind of get set? My worry is that if again the players of today, there were players of 2008 and 9 and that era, so the players of today, if they do not focus enough on new innovation, if they do not invest in innovation, and if they do not focus on collaboration, and if they start focusing too soon, too early on the bottom line, which is profit and closed loop and market share, we will go back to that stage. So we will have an S-curve, but the plateau will come very, very quickly. So I think where we're also focused is to keep pushing, inspiring, or through our grant work, trying to leverage ideas or present ideas or fund ideas, which can create an S-curve, which can take us to at least 50 to 60% financial inclusion. I think if we reach 50% mark, together, then it will reach a tipping point where the snowball will start to happen, and we have seen in many other markets when that starts to happen, then the laggards, the last 30, 40, 50% will only come if it's all sort of set, and they see others on digital banking or mobile banking as well. That's at least my optimistic view, and of course, in Pakistan, just like our cricket team, we really can't say anything. But I'm extremely optimistic that we have all the ingredients, especially the talent, which was lacking. Now we have the talent as well, and most of it is also in the panel.
Yeah. So yeah, we mentioned there P2P transaction. Interestingly, it was also the banks that were actually charging a lot on the P2P transaction. So with the regulatory intervention, yes, the numbers have gone up and it has helped the market. Omar, being in the center of all this, being with EasyPaisa for such a long time, how do you see the market? What has it achieved? And are you satisfied with it?
So, Fawad, if you look at the numbers, and you mentioned briefly the financial inclusion percentage, which according to Rehan has increased to 21%. If you just look at the number of bank accounts in the country, have they really gone up in the last 10 years? Do we have 10 or 20 or 30 more million accounts than we had maybe 10 years ago? That's not the case. The number of bank accounts in the country are pretty much where they were. The number of banked customers in the country are pretty much where they were. In the last 10 years, I don't think we've had any substantial growth in the number of bank branches or in the number of ATMs or even in the deposits which are held by the banks. So if you look at the branch banking side of the industry, there's not been a lot of growth over there. And that is where players like EasyPaisa and Jazz Cash had really, that this was our business model when we had come in with the branchless banking licenses. I think from a financial inclusion point of view, that is our mission, to make sure that the people in Pakistan, the Pakistanis who do not have access to a bank account, can actually open a bank account and get up and running. So our mobile wallets, which are basically accounts, these are available to customers. Now, it's also very important to look at because we are a mobile led industry. I think it's also very important to look at the mobile numbers. And even though we saw a substantial growth in SIM users and GSM subscriptions over the past couple of years, I think it's fair to say that in the last 1 year or 2 years, the numbers have slowed down. The market has kind of saturated. We're sitting right now at about 160 odd million SIMs issued in the country, active in the country, which would roughly place it at about maybe 100, slightly more than 100 million unique users, because it's the multi-SIM market. Out of these 100 million unique users, we have about 60 million smartphone users, and that is the key figure that I would like to focus on. So the smartphone penetration has really picked up in the last couple of years, and I think this is the one number that I look at, and this is probably the most encouraging number for a lot of the investors that Rehan has talked about, including our recent investors in our bank, because this is where financial inclusion truly happens, and this is what we can see from other markets as well. So smartphone penetration picking up and everybody carrying a smartphone is very, very important to financial inclusion. There's only so much that you can do on a USSD channel, and I would agree with Rehan to an extent that the first 6 or 7 years of having branchless banking services like EasyPaisa and Jazz Cash out there, because the focus was primarily on USSD, hence we didn't get anywhere. You don't. There's only, I think, 1 or 2 markets in the world where USSD has been the channel where financial inclusion has taken place, but not every country is Kenya. So having talked about telecom numbers, if you look at the payment numbers also, and I think Hiraj mentioned these also, nothing has happened over there in the last 10 years either. So the number of merchants has probably gone up, but the number of merchants accepting digital payments has more or less stayed the same, with the 30 or 35,000 odd POS machines in the country. So when you look at the overall landscape, I don't see a lot of things which have happened in the positive direction, or they moved positively in the last 10 years. What we're doing, what we've been doing in Pakistan is, of course, focusing on opening wallets for customers, getting them to do transactions with us. I think we are one of the, you talked about Easy Paisa and Jazz Cash. I think these are the only two players at the moment who are working on financial inclusion from the sense of opening accounts for customers who don't already have accounts. And the biggest challenge I think we have for us is the predominance of cash usage in the country. So when you talk about accounts and you talk about funds in those accounts and digital transactions taking place, you have to bear in mind that 99% of everything that happens in Pakistan happens in cash today. So there has to be a conversion of that cash to digital money to actually go on and do something. And I think the only two players who are actually doing something about this is, again, Easy Paisa and Jazz Cash, thanks to the agent networks that we have running. And we have about, I think, roughly about 100,000 unique agents across Pakistan who are engaged in this business today. But there's always this question, is this the right number? Is this sufficient? Should it be 100,000? Should it be 200,000? Should it be more? And the fact is that agents will only get up and start using or start doing agent transactions or agent banking for branchless banking services if there's a clear business case in front of them. I think Hiraj would testify to this, and he would know this much better than me, in fact. But if there is no clear business case for retailers to start doing financial services or financial transactions on behalf of customers, then they won't. They'd rather invest their capital in selling Coca-Cola or Pepsi. So that is the challenge that we have in front of us. We have to start figuring out how do we convert this massive cash in the economy towards digital. Because the biggest challenge that even we face, it's not about opening accounts. We already have, like I mentioned, 35 million accounts opened at Easy Paisa, another 25-30 million accounts opened at Jazz Cash. So the vast majority of the people who are carrying smartphones and even feature phones in the country, they already have these mobile wallet accounts open with branchless banking players. But it's about getting people to start transacting and doing transactions through those mobile wallets. The number of active wallets in the industry are not more than 15 to 20 million. So getting cash into the system, very, very important. And then, of course, having the use cases on the wallet, that is, again, very, very important. With use cases such as P2P, bill payments and airtime top-up, these are not sufficient. And customers have alternatives available in the form of going to any retail shop or any bank branch and paying their bill over there. So really, you need to have those use cases which attract customers to start using their mobile wallets. I think these are the two challenges which we are struggling with right now, actually. Getting cash into the ecosystem and then getting customers to start doing the transactions. I think overall in the last 10 years, the awareness levels have gone up tremendously. So there's the work that's been done on that front. In terms of technologies and growth of the overall ecosystem. So there was a time when players like Easy Paisa and Jazz Cash would be expected to do just about everything. And there was only so much that we could do. But it's very heartening to see now that there are a lot of new players who've come into the market who are picking up, bits and pieces of the value chains and saying, look, this is where we'll focus. So there are now, for example, bill payment aggregators who are coming in and saying, we'll come in and be a bill payment aggregator, which is good for us because then we don't have to do everything in the value chain, and we can't possibly do everything in the value chain either. It's also, so we talked about COVID. COVID has been very challenging on multiple fronts, especially the first front, which I talked about, getting cash into the ecosystem. Because of the lockdowns, because of the markets being shut down, that was a huge challenge for us. But then we did see a good uptake in the number of accounts as well. A lot of people, when they were unable to go out and do transactions with cash, they resorted to digital wallets. So that was good. The state bank-led enforcement of a free IBFT definitely helped in increasing the number of IBFT transactions in the country. I'm not a big proponent of the regulator coming in and taking commercial decisions for players, but you're right. There was a perception of a very unfair charge or unfair charges being in place by the commercial banks. So that was definitely there. I don't know if this is sustainable or not, because what we've seen is in the last couple of months, because of the free IBFT, a lot of the banks have gone ahead and started putting in limits and transaction limits in place. So that's negatively impacting the industry right now. There are a lot of customers who are being impacted through that. But let's see how things materialize. I think out of COVID, I would take two positive takeaways, and that is, I've seen a lot of online and retail merchants move towards digital payments. That's definitely number one. And I've seen a lot of, well, not a lot of, but I've seen some government services take a step towards digitizing their P2G collections. So the likes of what the PITP has done in Punjab, with the vehicle tax collection and other tax collections. I think the same thing was replicated by Islamabad and then by Sindh as well. So, over the last 10 years, we did not have any means of paying our annual vehicle tax. And now a few provinces are stepping up and getting that done. And I think over the coming years, we'll see more and more of these P2G services being digitized. I think it's very, very important, because this is actually where customers get those unique use cases I talked about earlier, and that is why that is where people are going to move towards wallets.
Thank you, Omar. Hiraj, as Omar mentioned, one of the key aspects has been to digitize cash, because and that is done mainly through the agent networks. You have an agent network that has been functioning for a while, and very recently I've seen that you guys have started working with even financial institutions, offering them your agent network other than your own services that you're giving on them. So your take on this, where are we as far as financial inclusion is concerned?
A lot of the points that Moeen made are very relevant to our business. The agent network is sort of your last mile access to converting cash to the electronic form, to essentially where it can easily move and then possibly become stored and be used in other things. So the agent becomes your sort of point of digitization per se, if I can use the term. And for us, the focus was that let us digitize the agent own business first, and then let that agent start digitizing the consumers in and around their own shops. So our first step was to digitize their procurement of telecom services, etc., and then certain other things, certain other settlements. And then as a second step, we opened the network to some extent to allow agents to accept deposits on behalf of EasyPaisa, and Jazz Cash should be going live also soon. So we see an incredible amount of demand for those services, that our agents are actually, in fact, very keen and very eager to engage with on that front. And I think just being a standalone agent, serving simply EasyPaisa or serving Jazz Cash creates a working capital problem for them, which is essentially the value addition that we provide, that you can do deposits into any bank account, any wallet, or accept payment from any bank account or any wallet. And we are, and through the EMI regulation as well, a lot of it will be enabled, where money coming in through the open loop schemes will also start ending up at our merchant network. So the acceptance piece is something that we are very eager and keen to solve, and we have not been able to do that because of the lack of a regulatory framework. Now the EMI in principle approval that we have, we are building the plumbing to enable that. And as a test, I mean, just as these may be small numbers, but we are already accepting bilateral payments at our retailers. And we crossed the 500 million mark last month. And again, these are completely unadvertised. So essentially, it's HBL Express, UBL Omni, and the largest now is EasyPaisa. HBL used to be our largest partner on this front, where people or agents using their wallets go and make payment to the one load retailer. And so essentially this interoperability of agent network enabled through where our retailer sort of becomes an intermediary to all the other quote unquote wallets, has created use cases in its own right. And we've realized, and it's very interesting that with EasyPaisa, it started out with agents transacting with EasyPaisa agents transacting with OneLoad agents for value exchange. And now it has become EasyPaisa consumers interacting with OneLoad retailers. And about, I think, 74% of the transactions from 100% have gone to the EasyPaisa consumers from EasyPaisa retailers coming into our network. So that is a very fascinating change and move for us. And that sort of underscores this, that the consumer demand is very much there to allow them to make payment to a retailer. And we are talking about the really low income blue collar worker. And again, these numbers are very small, they're peanuts. I mean, the 305 million of consumer payments from EasyPaisa consumers to our retailers last month is actually very small in the grand scheme of things, but that as a proof point and non-advertising driven, non-promotion driven is actually very, very fascinating that this can happen. And when we've done case studies on this, it's actually been money paid in exchange for eggs and bread. And we are hesitant to market it fully until it actually comes in the open loop, simply because we are able to do a bilateral transaction with EasyPaisa. We're able to do this, but we will start our marketing for our agents as such to put signage up there and all that once we have the state bank approval to accept Visa, MasterCard, open loop type schemes. So creating use cases is very important, and the agent is, I think, psychologically also, if you have value in your money in your wallet, if you feel that you can use it at your neighborhood retailer, psychologically that would theoretically create a lot more stickiness in that balance. And so the immediate knee-jerk reaction of a consumer today is you put money in their wallet, and usually it is because of the distance part of it. I mean, it used to be completely OTC, over the counter to over the counter. It sort of shifted to, because of price and other reasons, it shifted to people putting money in their wallet, sending it to their sort of P2P transferred across town or across the country, and then immediately they go and cash it out. And if we give people more reasons to use that money beyond, as it was mentioned, beyond just utility bill payments, they are very likely to be able to use it. And at a small scale, we're already seeing about 6,000 of our retailers on average a day accepting small payments from wallets for services other than cash out. And that to me is a very big change from before. And as I think the regulation allows us to proceed forward on it, and partly it's not the state bank's issue that we are not able to move forward on it. It's partly because since we got the in principle approval, connecting with all the schemes and NADRA verifications and laying the plumbing at our end, connecting to one link for settlements, etc. It's the third party dependency that we have for all the players in the system makes things a little bit slower for us. So but over time, maybe in another 2-3 months, we would have solved all that. And I foresee a very bright future for digital payments at the retailer level in the next 12 to 24 months. And I believe that we would play, our company, OneLoad, would play a very important role in that exercise, along with connecting the leading wallets, Jazz Cash and EasyPaisa and others to our retailers.
Great. Halima, I know that you have been new to this industry, so historic data would have helped you to understand how things have evolved over here. So what's your view regarding financial inclusion? How have we dealt with it so far?
So I have a very different opinion than a lot of the panelists here. While we did increase financial inclusion in the last decade from 11% to 21% that we talk about, from a gender perspective, there was only a 2% increase, where, again, I'm reiterating this, we make up half of this country's population. And if in the last decade, we have only been able to increase 2% and move women into the financial space, that's a problem. What are we doing? Are we doing enough to get these women into the financial space? We talk about wallets and we talk about bank account openings, but there is a structural issue involved in that, and that is an identity issue. A lot of these women from all socioeconomic classes will have issues around their own identity in terms of having their CNIC or some kind of an ID that would allow them to open up a bank account. Have we looked at different ways in getting them into the formal economy? Have we allowed them to have agency, authority, and autonomy over their finances in the last 10 years? I personally think absolutely not, and that's the kind of work that we're doing at Oraan as well. When we talk about, when Rehan talked about a lot of things being in place in terms of building a conducive environment for companies like us and the incumbents to actually drive more financial inclusion, there's a customer sitting at the back of it as well, right? What are the challenges that they are facing? Have we done enough research to understand their need? Cash cannot go away till we either penalize it or we make it inconvenient for people to hold it. At this current point, cash is extremely convenient. And I can speak from my perspective as well that going into a bank and making that transaction or using my banking app, it becomes inconvenient because there's so many checks and points. And I, as a slightly mature user of the banking space, get frustrated. Think about people who are not mature at all, who are looking for a quick transaction to happen. They will try their best to keep the cash at home to make that transaction happen rather than going into a bank or OTC or using their bank accounts, mobile. The other thing, which we work very closely with our customer base, what we found, which is extremely prevalent, was the trust issues. The common man or the average person is not trusting the financial institutions here. Have we done enough work? Are we getting into the right direction to make that make that deficit of trust or bridge that deficit of trust by educating them, by bringing them in, by incentivizing them, by giving them enough of a reason to use their mobile wallets or their bank accounts or go to the OTC, especially from a women's perspective. We have not done anything, and we continue to ignore the gender perspective in finance completely. We're in 2020. If only 7% of women are financially included, we have a problem, and we need to start working towards that problem collectively. One company, Oraan, alone will not be able to solve. We need an entire infrastructure to be able to say that, hey, we want to bring women into this space. Are there any kind of alternative data points that we can look at to build their identities, so that they can, when you look at from a space in their houses, majority of them might not be income earners, but they're actually the budget ministers of their home, giving them the power to actually take on the finances from their chief wage earner, and giving them enough of a use case and incentive to use digital transactions or digital products will only drive the financial inclusion, in my opinion, in this country. Because you can't holistically go for a dry financial inclusion when you ignore half of this country's population.
Yeah, thank you, Halima. So I think generally the panelists agree on the fact that not enough has been done. Yes, Halima, you made a very relevant point. Probably we haven't digitized use cases or incentivized women enough to bring them into the financial fold. I completely agree with you. Walid, lastly to you. So you have been providing consulting. So I'm putting you on the spot right now. You have been providing consulting to different organizations which are responsible or are taking initiatives for financial inclusion in Pakistan. How do you see it? Because I would like to understand from your perspective, someone who's been advising on how financial inclusion should happen. Have we been able to target the right methodology, the right analysis to achieve this?
Fawad, in my opinion, we didn't started working on financial inclusion till maybe 2016, 2017. So branchless banking did come around 2008, but from 2008 till maybe 2015, it was all OTC transactions. The mobile money players were primarily working on OTC transactions. There was agent war, commission wars which were going on, and people might have forgotten there was a time when Jazz telco customer couldn't open an Easy Paisa wallet, and vice versa. So this all has been happening in the past. So if you ask me, we although there were regulations which were coming out, there were people who were saying that we are working on financial inclusion, but in reality we were not. We were just working on the bottom KPIs and bottom lines and KPIs to achieve how much transactions are we doing. What branchless banking at that time did was, and kudos to Easy Paisa on this, they brought upon a behavioral change in the masses. The behavioral change was that, hey, you can go to your mom and pop shop at the end of your road and do a fund transfer or money transfer from one city to another, and that's going to be instant and that's going to be reliable. So that's what both Easy Paisa did. So they were the pioneers, so that they introduced it, and that was the behavioral change. Unfortunately, after that, I haven't seen any other behavioral change coming into the Pakistan. So when we talk about financial inclusion, when we talk about making railroads, the railroads are there, but it's the end consumer who has to understand what are the benefits of having a mobile wallet or a bank account. Unfortunately, that's one aspect where no one is working on. I would say, so having said so if I look from 2016 onwards, there have been quite a number of initiatives which have been taken. EMI has come up by the State Bank. State Bank also launched an EMA scheme, which you are aware of. It wasn't successful. We can talk about it later on also. And then over time, the government has played a very key role also. They have digitized subsidies programs. So the government, both at provincial level and at federal level, have launched digitized smart subsidies. So what that means is that previously most of the subsidies which government was giving out was to the manufacturers and the importers of, let's suppose, whichever field they're working on. What they realized was that it needs to be sent to the customer. So all those subsidies are now, not all, but I would say most of them are now being sent to mobile wallets of whether it's a farmer or whether it's any other field. So what I'm trying to say over here is that we need to work collaboratively. We cannot work in silos and expect that, hey, because we are bringing more use cases, the people will come and start onboarding and start using the services. We have to train them. We have to educate them. We have to provide that financial literacy to them. Right now, any person, so unfortunately, what has been happening is that we have been making boardroom policies. We have been making boardroom strategies, and we are sitting on the penthouse, or we are sitting on the 21st floor, and we are saying, hey, that Reriwala on the road who's selling shakarkandi, let's suppose, if he gets a mobile wallet, his life's going to change. Okay, fair enough, it's going to change. But how? Someone need to go and explain that to him. He doesn't know. So I remember there was a time when out of F8 in Islamabad, there was a Reriwala out of Jazz office, and it went viral because it was accepting QR payments. Similarly, I remember Finja did some publicity around the same thing outside Hafiz Center, that you can buy shakarkandi or something like that. So it's all good, I understand that, but thing is that we need to go and explain to the masses that what's the benefit for the shakarkandi wala or challi wala to have a mobile wallet. Has anyone actually gone and told him that, hey, you might be able to get a loan based on your transactional data? Answer is no. And that is something which is missing all across. So if I look at, unfortunately, from G2P payments perspective, the government doesn't have the muscle to go and educate the masses. So although they have done and launched few schemes, but there's a gap that who needs to educate the end user. So whether it's BISP, whether it's a SaaS program, whether it's these G2P initiatives which I'm talking about, this educating the masses pillar is greatly missed. And I personally believe I'm not going to take name whose responsibility is, but someone needs to figure out that who's going to take on and building this pillar, because till the time we don't make this pillar, we will be standing under a roof which don't have the fourth pillar which is necessary for that roof to sustain. So from my point of view, I think that behavioral change, that financial literacy, that financial health, all those things are currently missing in Pakistan, and I personally believe this is the main reason that we are so financially excluded. We have a regulator, and not regulator, multiple, whether it's State Bank, whether it's SECP, whether it's NADRA, we have very good regulators. SECP launched Sandbox, which no one else has launched in Pakistan. So through Sandbox, I know they are now legalizing crowdfunding also. Similarly, State Bank, if you look at from State Bank brought in branchless banking, then they brought in PSO, PSP, then they brought in EMI licensing. Now Karandaz and State Bank is working on MPG project. They talk about digital bank. So from the regulator's perspective, we can't say that we don't have a progressive regulator. Like that's the most they can do. State Bank as a regulator can't be an implementer. They don't have the capacity, they don't have the knowledge to be the implementer. But what they have been doing tremendously is based on whatever the new needs of the generation are. I think they have been working on it to bring it to the market. So does that answer your question?
Yes, it does. And I agree with you. So it's not the regulator's job to implement. I completely agree. They can provide an enabling environment. They can provide policy frameworks for private sector to work in, and that they have been doing well. I agree with you. Okay, so there has been so many areas that you guys have touched upon during your answers. Probably we would need another day to cover all of those, but I would like to focus on a few of them. Starting from a confusion that I have, and Rehan, I'm not trying to put you on spot, but my question goes out to you. So I'm a little confused. You mentioned regarding the numbers and how we do a survey in order to find out what number of people have an account or are financially included. Now, from a layman perspective, like I would like to understand that we get these reports from state banks saying that we have around, and as per June 2020, I think we have around 59.9 million accounts. Omar mentioned, have the accounts been increasing? Yes, the number of accounts have been increasing when it comes to the reports. The wallets, we have around 28 million active wallets. I'm sure the number of wallets is much higher, but the active wallets percentage is probably 60%, and somewhere around 28 million wallets are active. So if we add them up, it's a total of somewhere around 85 million deposit accounts or instruments available out there. Now, this does not coincide with the 21% that we talk about. So I'm sure, and the reason for that is that there are multiple people holding more than one account. Now, isn't it much easier if we were to run analysis on these accounts, that how many individual customers are out there who have an account?
I think, we could boil the ocean of data and hope that the genie would come out and lead us into the right direction. I think with 21% financial inclusion, it's pretty clear out there, and this is a demand side survey. And there has been a lot of critique by people who believe on the supply side data as a key data for analyzing a market. That there could be biases in the demand side survey, maybe and other issues as well. But I firmly believe that the demand side survey is an unbiased survey, and this is because randomized and everything. So if administered correctly, represents the true statistic. And this survey also has province-wise and major city-wise analysis as well, and one could see that while the inclusion numbers are higher in the cities, the exclusion numbers are higher when you go out. I think one needs to see that where does the Pakistanis reside? How much Pakistani resides in, and there's a large population in Islamabad, Karachi and Lahore and other larger cities, but then there's a huge population which also lives in rural areas, and they are by no means far-flung, and they are by no means dispersed. So they're kind of Pakistan is a very small country compared to, let's say, India or China or some of the larger countries. So it's the population is quite dense there as well. But the coverage of financial services is not there. Omar mentioned a key statistic, the number of branches. How have they increased and have they increased? So that has not really changed, or number of ATMs and those kind of parameters, and I'll add to it the number of POS machines have not really changed. So what I think is what we can learn from India in that matter. So India, for example, before UPI miracle happened and there was a huge surge of payment, before that what you see is they were also kind of nowhere. But if you look at their financial inclusion numbers, so there was a drive by the government and they were setting targets for the banks, and even to the level that banks would receive targets according to the villages and accounts in a village, and so it was kind of a very granular target which was assigned. One could argue that most of the banks in India are government banks or government has share in it, and that could have played the role. But in India, which has a kind of similar socio-economic behavior as a consumer, I would assume. So they basically had a different trajectory. Their financial inclusion for a very long time was quite high, and the payments came much later. And how they drove financial inclusion? Not through digital means. They had government subsidies. They were giving out food stamps. They were giving out, other sort of subsidies and agriculture, etc., etc. And a lot of it was actually given out in cash, and it was very later that it was converted into digital. I think what Pakistan misses, and what we are expecting the digital ecosystem to fill that gap, is that as a country, our economy and our banking, they are not connected. So let alone digital. So even, SME is not served by the bank. I mean, we should forget about digitally serving or opening an SME account and solving that. The banks are not interested to give or take business of an SME. And similarly, the banks are not interested to serve a consumer. It's a matter of choice. And when you choose not to serve a customer, and when a customer walks in, so the problems that Halima had explained, that problems are created so that you could exclude customers. And I remember there was one quote earlier in one of my courses that I attended, and somebody pointed out that if you look at PTCL's form that you used to sign or submit for getting a landline quite a few years ago, the end line actually, the XCN or whoever was responsible for approving, the line actually said that the PTCL connection is granted. Now look at the mindset of using that word, that you are granting, a landline, because it was scarce. Same goes with some time ago with gas connections and with electricity connections. So because the business model has been to exclude, hence all these barriers kind of crept in, so that you would only siphon the customers which are profitable, which you want to target, etc., etc. Now we have this excluded population which we want to target, and without changing the mindset, without changing the business model of how to serve and how to profitably serve this customer, I think the expectation has been that because we have a mobile, now suddenly that customer will be served. I think that's a big mistake. We also work on SME sector, and we understand that while giving a loan in 10 minutes or approving a loan in 10 minutes is a great, value proposition, but ability to approve a good loan, that's even more crucial. I think SMEs are willing to even wait for 20 minutes or a day if a loan can be approved. Right now, the banks are not interested to provide loans, to SMEs. So I think our economy is, and banking has not been, merging. The banks have been focused on lending to government, while EasyPaisa and JazzCash have tried to create an ecosystem, but that itself has only merged with the utility bill payment, and then the OTC side. And now we see the third wave. I think as Pakistanis, we have this big sort of issue. Why do we love cash? I think it's not just because it is inconvenient to transact digitally, and it is a burden on me to learn how to use digitally. There are many statistics. If you look at Facebook, if you look at WhatsApp, if you look at what Pakistanis are searching on internet, etc., we are very advanced compared to other nations, and that's where the barriers like access to internet does not come across. The barriers like access to my ability to type something does not come across. We cross all those barriers, and as a nation, we beat other nations. I think it's all about, there are a lot of people who don't want to use digital means, do not want to have a bank account because they see the benefit of keeping it informal, which are more social kind of barriers. And I think what Halima was also referring to, and excluding women out of the formality of the economy. I think that's something that access may not be able to solve and awareness may not be able to solve. Excluding women is something, if that's the norm, in general, supply side can't do anything. And availability of mobile wallet cannot do anything. It has to be a social norm change as well, and there has to be other cross sections with other institutions. Maybe academia needs to be involved. Maybe other change maker needs to be involved to drive that sort of revolution and evolution. So I think it's a complex thing. That's why I think a fair target is to reach 40 to 50% financial inclusion, because that's where I think most of the population which is urban could be covered. Most of the population which is young could be covered. Most of the population that Omar was referring to has a mobile account, has a mobile or a smartphone could be covered. I think we will then have to figure out a newer business model for the remaining, space that's kind of left. So I think we need to target the next 20%, which could be a homogeneous group. We need to include women into it, and then figure out another business model kind of there. So when we look at India, India had a very different trajectory. China had a very different trajectory and very different reason. So I think our path would be in a phase-wise manner. I don't believe that we're going to see a huge demand coming in based on a very ingrained consumer behavior. The initiatives are supply-led. And when it comes to Facebook, when it comes to WhatsApp, we see the same as figuring out how to use the system. But when it comes to banking, then they become kind of dumb. So that's where I think we need to reflect and see what is the real need that needs to be served.
Okay. Thank you, Rehan. I've been told that we are running out of time. It has been so interesting so far that I had lost track of time. But I'll just post one more question to the panelists one by one, and I'll basically divide the questions amongst them. Omar, to you, I would like to ask regarding financial literacy and the behavioral change, because you have been part of those initiatives like Walid raised. Who is responsible to do that? I don't think a single organization can do that. What is your opinion on it?
Yeah, so I would agree. I don't think there is any one single organization that can take on the responsibility of financial literacy or behavioral change. I think when so Rehan just talked about big players like WhatsApp and Facebook. I don't think there was any entity that came about and started teaching people how to use WhatsApp or Facebook. My very short answer to that question is that if you can get financial services into a shape or form where they are infinitely easy to use, there's a clear value in front of the customers to use these services. You don't need to get you don't need to worry too much about literacy or behavior changes and whatnot. I would disagree with the fact that we still sitting in 2020, we should still be thinking incrementally on the next 20 or 30 million. I think this is a make or break moment for Pakistan. We either figure out what to do now. If we are still sitting in a conference maybe 5 years from now or 10 years from now and talking about a financial inclusion percentage of something like 30% or 40%, I think that would be a complete disaster for the country. We have plenty of examples left, right, and center. We have India, we have China, we have Iran that nobody talks about. There's a population of about 81 million in Iran, where just about 100% of the adults are financially included. It's there. Somebody just needs to look at what's happened over there, and maybe it'll take too much time, but there are basically being government-led incentives for customers to start opening accounts and start using those accounts. The number of POS machines deployed in Iran for a very, very small population as compared to Pakistan is staggering. I mean, like it's shameful to even mention that they have maybe more than 4 million POS machines in that country compared to the 35,000 POS machines that we have in this country. Yeah. So there are certain measures that need to be taken by the government and the policymakers. I think the central bank has done a very good job so far. In some areas, they really need to pick up their game. But overall, we need to take some very, very strong decisions now. We can't afford to wait for another 5 years or 10 years to get to another, add another 10% of our adult population into formal financial services. That just can't happen. I think it would be a complete disaster for this country.
Thank you, Omar. Walid, a small question to you, if you can answer in a short. How important are government interventions? Like, for instance, we saw armor coming in. It did not work, but there have been government interventions when it comes to execution, not only in policy and regulatory. How do you see that?
For one, I think to an extent it's very necessary. If we go back to AMA also, I need to bring up 2 points with the first. AMA was being envisioned in around 2015, and that was a time when mobile money players or branchless banking players were not talking to each other. So they were bringing in an interoperable solution for everyone to join, and so that the customers could benefit. So there is the lowest part at that time was the USSD thing, which all we knew was not the prime motive behind AMA. The prime motive was to bring an interoperable solution where the use cases of one player can be replicated to all the other players also, and there would be a revenue sharing model between all the branchless banking players. So having said so, unfortunately, AMA never passed the first stage, which was the USSD, and there were multiple reasons why it didn't do. One of the reasons could be the procurement process was not that well. The vendor didn't have the capacity to integrate all of them. There could be multiple things. But having said so, similarly, if we go towards the other side on the G2P payments also, so BISP was the pioneer where they started working with telcos, branchless banking player to disperse their payments through mobile wallets. Then if you come across on the Punjab side, I've already talked about the smart subsidy programs where they are slowly and gradually moving, especially in the agriculture sector, to bring the farmers on the digitized payments network also. So I know we are running out of time. So in short, yes, government interventions are very important, but in the long run, it is the industry players who have to take it forward. The government cannot keep on working and keep on rolling that initiative for a longer time. They can just introduce it and then they need to exit from it. And it's the private players who needs to take it to the next step.
Yeah, Halima, a short question to you as well. What are the use cases that you see that could help, or how important are the use cases when it comes to women financial inclusion to have the right use cases digitized?
I think one of the most important ones is looking at from a social finance perspective. Women are generally social and capitalizing on that social aspect. For example, group savings, group credit, allowing them to compete with each other within a very social setting in terms of finance. It will drive a lot of women into the financial inclusion, and we see that from Iran's perspective. So one of the cases is that. The second one is looking at allowing women entrepreneurs to open up bank accounts and accept payments more easily and readily than what happens currently. I think that is a very important use case that is I think there's some work being done on that perspective as well. So these are the two things that come to my mind, which will, because when a woman, especially your middle income to lower middle income, is happy with a product, there's a viral butterfly effect that goes on. She will educate her networks and she will bring her. So it is becoming more and more important that an average woman needs to get into the space right now, and we need to cater to them as soon as possible. And like Omar Moeen said, right, if we don't do something now, we are headed towards a disaster.
Hiraj, a last question to you. How do you see the agent networks evolving from here where we are today?
Yeah, the agent networks and generally, I think digitizing the retailer is very important as part of the overall equation. So what I foresee, and we are working towards it along with many banking partners and the telecoms, is to allow the retailers to be able to accept digital payments at a mass scale. So what I hope to see is that in 3 years' time, you have 200,000 locations where you can go and make a payment, and 200,000 out of that, maybe 150,000 are one loads locations where you can go and make a payment with Visa, MasterCard, Easy Paisa app, UBL app, Alpha app, irrelevant which banking app you have, but you should be able to make a payment. And I think that ecosystem and that railroad we are building, we have the funding, we have the resources. We are eagerly trying to comply with the state bank's rules and regulations to be allowed to do this. The state bank has given us the approval, and we are connecting to the ecosystem overall, such as NADRA and others. And there may be some delays on that, as there is often the case in connecting with government-run organizations, but we'll get there. So I feel that the retailer digitization is going to be very important, and it will happen. So I'm very optimistic on that front.
Great. So I would like to thank you all my panelists for being here. I'm sure this 1.5 hours could not do justice to the topic that we were to discuss. I hope that we are able to, probably from Pakistan FinTech Association's platform, host sequence of these with you guys. There's so much to learn, there's so much to understand, and like Omar said, we don't want to be sitting 5 years from now and discussing the same thing again, because we have been doing that for 10 years now, and we don't want to do that again after 5 years. So we have to identify what are the next steps, what are those critical decisions that Omar referred to, strong decisions that we have to take, and move forward. Thank you so much all. Faris, over to you.
Thank you so much, Fawad. Thank you everyone. Fawad, thank you for moderating that so well. I like the way you summed it up, and unfortunately, as you said, we have run out of time, but I would really like to sum up the points and just 3 main things before we call on the next speaker. We've got technological advancements that are in the pipeline. We've done fairly well, but there's just so much more that needs to be done. You've got the human element in terms of adoption, and as Mr. Rehan Akhtar quoted the example of India, where you already had financial inclusion, but the adoption came much later. And then what Halima has obviously stated, then you've got gender equality, or rather gender inequality, to add to the mix. And when you look at it, there's just so much work that needs to be done. But I guess that just shows that we are at a very exciting time, and there's just so much happening, and that gives us a lot to think about. So thank you all very much. Thank you for sharing your experiences and thoughts. I'm sure this has been extremely useful to everyone who's tuned in. We are now moving on to our next speaker. I would just like to quickly welcome Yes, you may leave. Right, so our next speaker is a gentleman who's joining us from Singapore. He is the global head of digital banking at retail in Standard Chartered Bank, at Standard Chartered Bank in Singapore. He's actually been with them for a number of years, for over 22 years, as a matter of fact, in a very senior role in Asia and Africa and the Middle East. So he has a wealth of experience that he is bringing with him, and he is going to share with us. He's also an avid painter, so that just goes to show people who work in commerce are extremely dynamic, and that says a lot about them, and that also just really says a lot about their perspective when it comes to work, and which is why I'm really looking forward to his talk. Mr. Alishan Zaidi will be speaking about digital banks, the future of the operating model. I believe he has logged in, if I'm not wrong, or maybe he hasn't just yet.